Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Cucchiara, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchiara.
Welcome in, Joe Cucchiara with Real Estate Radio Live. Thank you for those that are continuing to tune in the show. We are doing less frequently, only about 2 days a week now, although hopefully that'll pick up soon. But we like to keep you and kind of in touch and really at top of mind in terms of what's going on in the real estate market. Of course, that was what we focus on. We do other shows, as you know. Jack is with me today. We did a show for a couple of years ago now about starting something new and then growing with the second. And then, of course, COVID kind of turned us all upside down. So now we're doing these shows for the most part with Mr. Jack Russo in Florida, who has been a great resource for really funneling information back to us here in California about the real life of relocating, although it's not 100% relocation, right, Jack? It's just kind of a transition, and you'll have kind of live in both places, it sounds like.
Well, it's sort of trying to take advantage of what is a new Silicon Valley that's being established. If I had to do this, I would probably do it both here in Florida and in Austin, Texas, and I might well get a place in Austin, Texas too, because there's so much going on that is replicating Silicon Valley, both here in Florida as well as in Texas. And it's actually a lot easier to become a member of the bar in Texas than it is in Florida. I could tell you stories about that. I mean, I will eventually become a member of the bar of Florida, but man, do they make it a ginormous bureaucracy to do it.
Really?
I can tell you story after story. Like, they want every last college certificate, like every last parking ticket, like every last bit of information about me that's on any type of file anywhere. I mean, the file's got to be like this thick at this point.
That's kind of interesting, because we always think about California being the most difficult to do everything, Jack, but you're saying that actually the bar associated with getting the bar there is tougher than California even, huh?
I think it is. And maybe
Really?
because I took the bar exam 40 odd plus years ago, I was a much younger man and didn't have as many items in my file, you could say. But I would say that in general, the Department of Motor Vehicle was very simple in Florida, very efficient, very effective, particularly during COVID. I would say the State Bar of Florida, of course, they'll probably criticize me for putting this on the air, but I would say the State Bar of Florida makes it a ginormous experience to try to even process an application. And it's very expensive. I mean, it's several $1,000s to take an exam that you don't even want to take. And you would think you shouldn't have to take, but believe me, the stack of materials you have to read is like this. And you take actually 3 exams. You take an ethics exam, and you take a national multi-state bar exam, and then you take what might be called the local Florida bar exam. So it's like basically 3 days of exams, and then they take about 6 months to tell you if you pass. So, and they're processing a criminal check and all that jazz, which obviously I have no issues. But they even asked, I mean, this was the thing that just really cracked me up. They wanted to know about my marriages, plural, which of course, you know, my previous wife died.
Right.
And the wife before that left me for the next door neighbor. And they wanted to say, please give us the name because we want to make sure any spousal support has been paid. This is decades ago, you know, like even if the person is deceased, yes, we want to check in with the next of kin to see if there might be an issue. They're so worried about letting someone who has the reputation of, I guess, like Donald Trump or something from become, you know, like if Donald Trump Jr. applied to the Florida bar, he'd have some big problems. I mean, he's openly admitted he cheated on his wife. There's just a bunch of stuff that's going on with him and his whole family. I can't even imagine how he would even get to take so many issues with his character assessment. But they do a character assessment. And, you know, of course, when you're an older guy, you start to think, hey, you know, I've been through this so many times, just give me a pass, right? It doesn't work that way. I've got to be the oldest person that's applying to take this exam. And man, do they have questions for me like, you know, what are you doing? Like, what are you doing at your age taking this exam? Like, what are you up to anyway?
Well, you got your hands full there. So in this transition, what's interesting is, you know, you've shared a lot with our listeners and me, of course, with, you know, you went out there, of course, to take care of your brother and your mom, and your brother since passed away. We're sorry to hear that. So you didn't really go out there thinking, well, gee, maybe I'll spend some time out here. It just ended up that way. And it turns out it was right during the pandemic. And so
I don't even think, Joe, I don't even think I took a suitcase with me. If I'm remembering when I first came out, seriously, I bought a bunch of clothes out here. I've lost a lot of weight too, although
good for
my
you.
upper body's actually big because I've been weightlifting, but you know, I probably lost about 40 pounds over this period of time. Yeah, so I've been doing, as I said, maybe before we came on the air, I think the future, if anyone listening has to decide that they're thinking about moving, I think the way to do it is find yourself a yoga studio where you think that the classes are really going to help you, and then learn from that community, because the speed of trust in a yoga community is super fast.
Interesting.
People, there's something that happens in a yoga room, particularly a hot yoga room, where the metabolic field of the group of humans is so shared, even in times of COVID, which you might question, but these yoga studios that are open here in Florida, they're using UV light to purify the room from each session. So actually they're dosing you with UV light that does kill the coronavirus. And I have to tell you, someone needs to do a study, but I would say that people that do yoga, probably, especially in ultraviolet lit centers, which is all the ones I've been to a number of different ones to sort of test the water in each. They all have UV light. They all spend a lot of money on their lighting. I believe that the stats would be that those people actually do better medically than others at all ages across the board. And the ages can be anywhere from, you know, like kids in their teens. There was a kid in a class last night that I swear was like 7 years old. It shocked me. And then there are people that are in their 80s in a hot room. That's great. You know what? You strike up a conversation with them after or before, and the speed of trust is very fast.
Yeah. Well, what would you
people kind of feel your metabolic field.
Let's cover a couple of points here, since again, what's great is you've lived it and you've done it. You've been in California for 40 years. You spent time in New York, born and raised, went to law school out there, kind of came out there. So as you're spending time in Florida now, there's a lot of people, as you know, Jack, I mean, millions that are fleeing from California. I don't know about millions, but there's a lot. And so what type of advice and feedback would you give them? You know, let's just say people that have real estate in California, because you have people in different buckets, right? People that are, I'm selling, I'm getting the hell out of here no matter what. I don't care about it. I'm selling my house. I'm selling everything. I'm leaving. And then you have some people that are a little less, you know, kind of knee jerk. So they'll say, well, you know, I think I'll go live somewhere for a year. I won't sell all my real estate. What are your thoughts now that you've kind of been through this?
I would say there's three kinds of people that I hear that have these views about making change. I mean, the big topic is making change.
Right.
And in a period of something like a pandemic, and remember there were fires also going on and poor air quality. So California had kind of a triple whammy there. It had a pandemic, it had fires, and the fires were leading to very poor air quality. So it was like three things all going down at the same time. And I got a lot of calls from people saying, look, I'm just thinking about moving overseas, like literally to Europe. And they wanted to know about the basic rules. And I don't profess to be a tax expert, but I said, look, your income is going to be taxed worldwide federally, because that's the federal income tax system, with one exception. And that only one exception is if you move to Puerto Rico and you get the Puerto Rican decree, which has to be approved by the Commonwealth of Puerto Rico, that you are really a resident and you're working in Puerto Rico. You're a resident and worker and citizen. You don't give up your US citizenship, but you become a citizen of the island of Puerto Rico. You can get a very special tax treatment under the Internal Revenue Code. It's the only way to avoid this global, massive, I'm sure it'll go up, federal tax. And some people were like, wow, I knew nothing about that. It's not been well publicized. Of course, Puerto Rico's been slammed. So that's one class of people that are like, I want to get out from under the noose of federal and state taxes, and I'm going to move overseas. And I said, that's great, but it doesn't work unless you're literally giving up your citizenship. And that introduces all kinds of consequences, like paying an exit tax, which is what California is also talking about. And let's just leave that subject. But then the second class of person is, I'm just thinking about moving from California, and I'm thinking Nevada, but I'm still going to work in California. I'm going to commute. Well, California will take the view that your income is from your work in California if you're commuting from Nevada to your office right over the state line, even though your residence is in Nevada. It starts to get blurry if you say, well, I don't commute, but I do everything by Zoom for my employer that's in California. That becomes sort of a different case. So that's the second class of case. And then it becomes, is it Nevada? Is it Texas? Is it Austin? Where's the new Silicon Valley? Where's the new opportunity? A lot of people aren't saying things like, I'm going to go to Montana, or I haven't heard that yet. Although, obviously, if you're retiring and you like to ski cross country, Montana may be great. It's a lot of snow and a lot of open space. So then the third class is someone who's like, I really want to straddle all the above. And there actually is an answer to that, but people don't really want to hear it, which is you can do it, but you got to keep really detailed records of where exactly you're spending time. And there actually is an app, it's pretty expensive, on an iPhone that keeps those records for you. I want to say it's like $100 a month to keep the exact records of where you are and whether you're sort of a perpetual traveler that's traveling like on the high seas with your yacht, and where do you relocate once you're that perpetual traveler. So, of course, in the context of doing business planning, there are still people that believe you can't raise money except in California. I have to tell you, I don't think that's true. There's a lot of angel groups here in Florida, and actually a growing venture capital community here in Florida. So I'm not trying to pitch Florida over California, because obviously most venture capital and most venture capitalists are still in Northern California. Right. And that probably is going to continue to be the case at least through the end of the decade, is the way it looks like to me.
Yeah. So there's three different kind of categories as you see it, or classes. And so, we were talking a little bit before we started the show. I see a lot of, I've kind of lumped them together. There's a lot of knee jerk. There's a lot of people that are reacting to the political environment, the taxes, Governor Newsom. We have a whole basket full of things that are taking place here. The other thing that I see is, obviously people could work from different places now. Real estate, everywhere you go, inventory seems to be low. It's a real interesting dynamic that's taking place right now. My guess is part of this has to do with such an incredible run up in the stock market. We've had a 10-year bull run now, and so
low interest rates.
And low interest rates.
Super low interest rates.
Yeah.
I'm amazed when you turn on a channel like CNBC, they're fretting that the Fed is moving the rate up from 1.2 to 1.3. Like, that's still a very low historical rate. Any rate that's under 4% to me is a shockingly low rate. I haven't been lucky enough, maybe I have, but I've never scored a rate that's under 3%. I think the rate I ever scored in my entire adult life was maybe 3.5%. I think it's hard, but you'll tell me you scored probably some rates with people that are even under 2%, right? Have you?
Oh, there was a time period where the 15-year, you get a 15-year conforming loan, if it was under 500,000 or so for 1.9%.
I mean, think about that. When you're done with then the deduction for the home interest, when you're done really with all the value that's created, you're paying almost nothing for the use of that money.
Right.
So anything that's reasonable that you invest in that you maybe can do a few bucks of fixing up is going to yield an amazing improvement on the down payment in terms of leverage, right?
Yeah.
A $500,000 loan, if you put 100,000 down and another 100,000 in, and you've created, a $1 million property as a result of it, you've got a lot of gain there. And a lot of young people don't realize that gain is not taxable for married couples for the first 500,000
Right.
if you live in the property for 2 years. That's section 121 of the Internal
Right.
Revenue Code. I never learned that when I was I took the tax course in law school. They didn't teach that. I only learned that after I sold my first house, which was years later.
Yeah. I just don't know. We'll see. As we talk about it now, it's easy to look back and say that some people may have saw some things coming. Of course, no one saw the pandemic coming, even though there's been books and things written about it. But what I'm seeing now, though, it seems awfully eerily familiar when everybody has this sense of losing out. I'm seeing this real estate market where people are overbidding 20, 30% of the value and running things up, and there's all kinds of money. And I don't, it can't continue. So I don't know what's going to stall it. I don't know what's going to be next. That people are going to look back 5 years from now, why I didn't see that coming. But it's interesting. I don't know how it is out there, but out here, Jack, it really is feeling a lot like, remember the people were panic buying, like if I don't buy now, I'm going to miss out on it, and home values will never come back down. And then of course we saw what happened. But it's interesting. I don't know, because as we all know, I know there's this euphoric feeling right now with a lot of people in the stock market and real estate, but at some point there has to be a correction.
Yeah, I think the interest rate increases and other changes that occur over the next couple of years will cool off some of this. But, some of it is motivated by people who have to spend more time in their home.
Yeah, right.
Find a lot of things wrong with their home. I mean, like along the lines of, there's not enough space in this house for the two of us, honey.
Right.
We either have to get a bigger house or we have to think about splitting. And, the cost of splitting up can be immensely much higher than just upgrading to a bigger house. So how does a couple do that? Whether it's man and woman, man and man, woman and woman, whatever combination you want to talk about, they typically look to what's the monthly amount we can afford.
Yeah.
And then they reverse engineer to a number.
Mm-hmm.
What's our down payment? They reverse engineer. I'm sure you've done this with many couples over the course of your professional career. Right. And all of a sudden it's like, wow, we can afford that $3 million house. Who knew?
Right.
And you're like, yeah, that's the magic of a low interest rate and a big down payment, right? I mean, if you can make the big down payment, it's a big down payment because they're leaving a house that's got a lot of gain that they're ready to move tax-free into that new property. Mm-hmm. So the stuff does work in a cycle. And, if you look at a married couple, look, I came to California in the 1970s, and the very first house I bought was while in law school as an unmarried couple, and then getting married, and then saying, oh, we could fix this little piece of junk house in Anaheim really close to Disneyland. We used to see the fireworks at night from Disneyland every night. It got boring to watch fireworks because every night there was fireworks going off. And what I most remember about that house is it had its own orange tree because the housing had been created in an orange grove in Orange County, which is where Anaheim is. And we had fresh orange juice every morning right from our tree, which was kind of a magical thing. And we sold that house, and it was the first 50,000. I think we bought it for 60 and sold it in 2 years for like 110 or something. And it was the first gain that we then rolled into a house that shocked us, which is Palo Alto, where we said it's 1/4 of the house for 4 times the amount of money. Like, what the heck is going on here? But sure enough, that house ended up being worth, close to $1 million by the time it got sold.
Wow.
And it was amazing. I mean, it's just like an amazing story in terms of how, if you play this game well enough, you do eventually become housing rich. Now, you might become cash poor in the process, but you can become housing rich, and on a balance sheet, even fairly valued, you could have millions and millions of dollars of real estate, and you say, wow, how did I get there? And if you backtrack, it's this magic of appreciation, tax-free gain, rollover, over and over and over again, in a way that's creating this massive equity. Now, you have to hope this is your worry, a crash doesn't happen to do what happened in Las Vegas, which is a lot of people got wiped out almost overnight. Condos that were going for $1 million a year earlier were being sold in batches for $100,000 a piece.
Yeah.
You can get 10 of them. And it was like, what happened? There's no demand for them anymore because the bubble burst and there was no more financing and no one was playing the game anymore.
Yeah.
So that's a worry. You have to worry about that. Of course, if you pick the best property in the best neighborhood, and it's really not deteriorating, the neighborhood's not, you should be okay. I mean, you want something that can be rented if you can't live in it. Obviously, the most control comes over where you live because you're in control of fixing it.
I'll tell you the thing that stuck with me, Jack, that I think holds true. And there's some things that none of us know, and we guess and we speculate. But what I have seen in the last couple of kind of economic downturns that holds true is that housing will recover, number one, quicker, and a chance even more stronger in the long run when you have a strong business environment and workforce within that geographical area. So
absolutely. People move for jobs. People move for jobs every day of the week. Right. So look, if you say Silicon Valley has 5 big hubs, there's no question it's got the hub of San Jose and the Googles of the world and the Microsofts of the world, and the Samsung has a big facility that's nearby, and it's got now this Caltrain idea that's going to move people around the Bay Area quickly. It's got the Mid-Valley hub with Box.com and a huge number of others that seem to pretty much be very much staying. Mm-hmm. It's got the San Francisco hub with Salesforce and other big players in San Francisco, no question about it. It's got the Berkeley hub, which has lots of spin-off companies from UC Berkeley, and it's got Tesla in the East Bay. Now, Tesla is growing so rapidly, I don't think they're going to leave that factory anytime soon, but clearly they're expanding into Reno in ways that suggest that maybe the East Bay could have been further developed, but that development's moving more to Reno. But if you look at a lot of employment, and people still do want to meet, although maybe less and less often, which is this whole question of how will the future of work get done? Right. It looks like it's not going to be 5 days a week in an office anymore, frankly.
Doesn't look like it. Yeah,
it looks to me like it's maybe lucky if it's Tuesday, Wednesday, and Thursday, and people are literally working from home on Mondays and Fridays. Whether they really are or not is another question, but their productivity will be measured in other ways, I'm sure.
Yeah. I don't want to talk a lot about it, but we have about 10 minutes or so, but I would like to chat a little bit about how this is a dynamic. It's not directly tied to the housing market, but it is interesting, this whole new dynamic of the SPACs, right? So for those that don't know, I'll have Jack kind of go through and tell you a little bit about, but the reason I want to have you share a little bit on this, Jack, is that you've been involved with venture capital and investments for 25, 30 years. So tell people a little bit about what SPACs are and how they might affect the kind of the investment venture capital world?
Right. So they're affecting it in three ways. First of all, SPAC is an acronym. It's a four-letter acronym, SPAC, Special Purpose Acquisition Corporation. Special purpose means it's filed as a public company, kind of as a shell.
Okay.
So it's a public company. It doesn't have a business yet. So think of it as the paperwork and legal are all done, and there's essentially an entity on a shelf. It could just as well be like shelf, perpetual shelf corporation that's sitting there waiting for some business that has ideally a real business. Now, this is where you got to worry about hype versus real business. But ideally, it's a real business with real employees, real products, real services, real cash flow that has a choice. That business can go to venture capital, it can go to private equity, it can go to strategic investors, corporate investors, or it can say, these guys in Wall Street or wherever they're located, because some of them are being done out of other places than just Wall Street. They've got this entity that's sitting with a lot of cash capital that's been raised already. They're willing to merge our business into their quote unquote business. Of course, their business is just a bunch of legal paperwork, and give us a great deal in a combined company that will be worth a lot more than the current value of the SPAC, which is just kind of a shell. And the result of this will be a new public company. Now, what does that do? It says to the venture capitalists, you can't rape this company in a growth round because it's figured out another alternative. This is basic negotiation.
Interesting, yeah.
It's a BATNA. It's the best alternative to the negotiated agreement with the VC, with the private equity, with the strategic. You are negotiating with a fourth provider of capital because these companies have capital, or they can do another round as a public company at a humongous valuation. So it's cheap money, maybe dumb shareholders, but cheap money. But, these shareholders presumably are going to have analysts watching it and paying attention. But some of the valuations have been unbelievable for companies that have no products yet. They have ideas. They may have a few patents. I mean, there's a number of them that multi-billion-dollar valuations, and you say, what are they shipping? Nothing. Yeah. What do they have? Nothing. It's in the lab, but they have the right team. I mean, that used to be called a venture capital opportunity, maybe a private equity opportunity, maybe a strategic investor opportunity where the corporation was maybe going to use the product that would come out of the lab, but it wasn't a public company yet. Now the SPAC is actually opening up the possibility of these pre-revenue companies getting capital at a very low cost relative to what would otherwise happen through multiple rounds of financing. So if I'm a venture capitalist, I have to start worrying that these entrepreneurs are going to basically say, I don't need you anymore. And I don't know how they play that game. I could tell you I was at a couple of different board meetings where I'm listening to the VC argue against the SPAC alternative. I'm like, do you think you're a little biased? And I'm like, well, maybe just a little. I'd say, basically, these guys are competitors, and the cost of money just got really cheap for the entrepreneur. And you know what that's called? Someone is eating your lunch. And I'm not pretending that lawyers aren't vulnerable too. We are. LegalZoom is a good example. That whole low end of the market for a lot of lawyers has been completely wiped out. I mean, I see ads in the newspaper here in Florida for a lawyer will do a will for $49. And I'm saying he's competing with LegalZoom. I mean, literally in the newspaper. And he's okay doing that because he just wants to get a client base started. And he hopes to sell something probably in the future because you can't possibly make money doing that.
Right.
And having a file open for that low of a price.
Before we wrap things up, so do you think the SPAC, that's what I love about capitalism and business and entrepreneurship is I love this kind of stuff because everything just keeps evolving. I get a lot of energy from. So
It goes fast. It goes really fast.
Right. So do you think that the SPACs, the model, the concept is a trend, or you think that's really going to have an effect, short and long term on how venture capital structure their offering?
Yes, the latter.
Okay.
It's a real thing. It's here to stay. I don't see the SEC as shutting it down. The SEC will shut down fraud, but there's some real genuine companies that are coming out of these SPACs, and they're going to more rapidly get their product to market, because if you had to buy a car, like there was a recent one where a competitor to Tesla went public on a super accelerated basis through a SPAC.
Mm-hmm.
You're going to buy a car now from a public company. That feels a little better than buying a car from a private company that the warranty may not be worth the paper it's written on. This is a public company that's raising like $5 billion to actually have a war chest against Tesla, which is obviously headed to maybe $1 trillion valuation at some point soon. Pretty amazingly, right? I mean, look how long it took Apple to get there.
Yeah.
I mean, Apple, the word on the street is Apple is working on an electric vehicle that's going to be self-driving, but I think of it as kind of like a toy. They want it to be sort of a local commuter thing. From everything I'm reading, they want it to be like 4 people get in and play cards or something while the car drives them around the Apple campus kind of thing. I don't know that the market is going to be there for that kind of toy, but good that Apple maybe is diversifying. Maybe it'll be a stunning failure. I could list the failures of Apple that no one thinks about, because I've seen it from the very beginning. But my point is that the SPACs that are doing real things will prove that there's an alternative to venture capital, to private equity, and to strategics. And a lot of entrepreneurs will start to get the flavor of, I can have a 20% stake by the time all things are done in a SPAC, versus I might have like a 5% stake if I go through all this venture capital, private equity stuff. And along the way, I'm being diluted. And by the time the company goes public, I've got a mere pittance of the company that I started.
Amazing.
And so yes, capitalism is all about creative destruction. SPACs are a version of creatively destroying alternative sources of money. The VCs have to respond. It's an interesting question of how they do it. They either have to differentiate based on the view that the quality of the board services are so amazing, which, I can give you views about what I've seen historically, or that their networks are so powerful that they can somehow get your development accelerated in ways that cash can't, which, of course, is an interesting question too. Whether that's really true.
Before we wrap it up, remind everybody where they could reach you. I know you're practicing now throughout the United States more than you thought you might.
Well, I work longer hours. I'm up at 5 a.m. East Coast time, which of course is 2 a.m. And I'm typically working until after midnight here, which is after 9. So, I've got this shrinking amount of sleep, but I've been doing more yoga, so maybe it sort of works. But yeah, we still answer the phone at 650-327-9800. But most people by sending an email. We go through a little screening process of, do you have a case or a matter that we can really help you? We'll be very straight with you if we can't, and we'll refer you to other people who can. We typically focus on entrepreneurs that are starting or growing companies and that need help, typically with their sophisticated intellectual property questions, sometimes not so sophisticated, and obviously with dispute resolution in every flavor of it: federal cases, state cases, arbitrations, mediations, negotiations, the whole gamut. And we've been doing it. I've been doing it for over 40 years. We as a firm have been doing it for over 35. And generally speaking, I think we do it better than most others. But if we think you need a big firm because they have something to offer that we can't offer, we'll tell you that. I know all the big firms in town. I know probably all the big firms, frankly, throughout California, and now even throughout the East Coast. And we still have some roots in New York and some practice there too. And I'm licensed, of course, in too many states. My wife keeps telling me, do you know how much you're paying in bar dues in all these places? You know, California, New York, DC, soon Florida, soon Texas, state of Washington, state of Oregon, and the best is the state of Hawaii, because that's where I thought I was going to retire. And my wife was like, man, Florida is not Hawaii. You know, maybe you should really take a step back and think this through. I passed the Hawaii bar many decades ago thinking that when I got to be at this stage of life, I would be like literally on the beach in Maui. That's a good story for another time.
All right, Jack, it's good checking in with you. Thanks as always for the great advice and information and feedback. We'll try to do this again next week.
Yeah, you look good, Joe. Whatever you're doing, you must be out on the golf course because you're looking pretty tan there.
I'm on a golf course. I actually lost a little weight myself, not much, but about 10 pounds. It helps, you know.
Well, I'll tell you something. The lesson in life is as you get older, eat less, exercise more.
Very true.
And just try to put your health first, because, man, I look at all these people in my family that are either dying or in the process of dying, and they're all overweight. They're all eating the wrong things. They're not exercising. I can go down the list. And the more I think about it, you really have to put your health first.
Yeah.
And it doesn't matter how much money you have. I mean, look, Steve Jobs was arguably a billionaire. Maybe he really was a billionaire. And he did not put his health first. He did a lot of wacky things. He died at the age of 56 or so.
Yeah.
And he probably would be doing really well right now if he had put his health first. And there's a lot of stories like that.
Yeah.
Of people that had everything to live for, and they really didn't put their health first, as it turned out.
All right, Jack, good seeing you. Take care of yourself. We'll be back in touch next week.
Great. Thanks very much.
All right, take care, Jack.
Bye-bye.
Jack Russo, along with Joe Cucchiara with Real Estate Radio Live. Thanks again for those that are checking in. For more information, you can always find us at RERadiolive.com. That's RERadiolive.com. Take care until next time.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.